Now, the Dow was down 184 points, down 0.44%. S&P down almost 10 points, 0.17%. NASDAQ down 0.04%, pretty much flat. The Russell was down 0.68%, the worst performer of the four. And the VIX was up 8.41%, getting above 20, rising to about 20.5. Okay, tomorrow we're going to get the jobs report before the market opens. I think we have one or two scenarios that could play out here. We could either bottom with the jobs report and start to try to rally back up, or it could take the S&P down to the 20-period moving average and the rising trend line and then bounce and try to rise back up. I, again, want to make it clear, I still believe the S&P is not topped yet. I think NASDAQ's going to go fill the gap. S&P will move to another new high, probably to the upper channel line that I've been talking about on the weekly chart. And then I think it'll top. And from the first Fed pivot, 2001, 2007, it's about 3.5, 4 weeks or so. Tomorrow, by tomorrow's close, it will be 2.5 weeks since the Fed pivot. I told you, I think, again, as a rule of thumb, we're looking at those previous first rate cuts and going, hey, okay, well, we topped 19 days, and 19 days after the first rate cut with the bounces. 2007, it created the top. With 2001, it resumed the crash, which the market had already peaked in 2000. Looking at that as a rule of thumb, give or take, it could happen sooner, it could happen later. I still think you're going to get a divergence on the S&P 500 with the RSI and the Awesome Oscillator. I'll be showing you those charts. We're going to get the non-farm payrolls, and the unemployment rate. The unemployment rate is supposed to hold steady, and that's going to be at 4.2%. The non-farm payrolls, jobs created, supposed to come in at 150,000, supposed to beat the previous month again. Said we continue to see the Labor Department overestimate and then revise downward later. Wouldn't be surprised to see an upward revision. Maybe that's what gives the market a rally, or again, a stronger number than expected. Again, when you're getting fake numbers, anything's possible. I mean, they could just make it up as they go and change it later. I know that the numbers are bogus because, again, from March of 2023 to 2024, we had 818,000 jobs overestimated. And then, again, since then, each month, the revisions that happen and the fake numbers that we continue to get. Right before an election, maybe we get a really good report, really good fake numbers. So we'll see what happens. But again, so off with the jobs report, watch the 20-period moving average, and then using trend line, which I'll show you in a moment. So we'll see what happens. But I think you got a shot of rallying with this. And again, this is we're going to try to rally into a new high probably next week on the S&P 500. Quickly, don't forget we're going to get the FOMC minutes next week on the 9th. And then on the 10th and 11th, Thursday and Friday. On Thursday, we're going to get the CPI data, the core. We'll get the PPI, wholesale inflation, on Friday. Just want to continue to point out, as we're just under that weekly resistance and bring in that resistance zone on the monthly chart on the S&P 500, we have an 8 of a 9 count. So far, bar 7 is the high of the count. Quickly, the 9 count, we had a 13.9 over here. We went a little bit higher, and then we turned. This is now setting up another 9 count, so we'll have a 9-9 reversal pattern at key resistance levels with negative divergences in place. I'd pay attention to this, showing price exhaustion. Now, the 8 bar, if we rally up, the 8 bar could be the high of the count this week or next week, or you can go a little bit higher like you did over here. Same, it's a guideline. Previous rate cuts, the first initial cuts, it's a guideline. Maybe shorter, maybe longer, a little bit, but again, I'm looking for a top on the divergences in the weekly and the monthly time frame. Again, this is also showing, hey, we're getting tired, but we still could move higher, and bar 8 or 9 could be the high of the count here in the weekly time frame. NASDAQ got the 9 count back over here in July. That was the top for NASDAQ. Already pointed out to you that we've had the 13.9 signal here. It was a 9 count that we peaked over here in 2022, and again, this is a monthly time frame. I say weekly, monthly time frame, a little bit higher than that in the first week of January, and then we turned. Here we've had the 9 count. We've gone a little bit higher. Looks like the 8 bar was the high of the count, so it's a perfected signal. So I expect that we're going to turn. This is showing price exhaustion. So you have the 8 of the 9 in the weekly. You've got the 13.9 here. Monthly time frame, we have this potential massive head and shoulders that if it were to play out, it could take us all the way back to beyond the pandemic low, the levels I've been talking about. But again, I just want to draw this to your attention because again, this is a huge warning sign, just like it was back over here. The monthly chart, weekly chart getting our 8 of a 9. Next week we'll have a 9 bar. If we continue, 8 or 9 bar has to be the high of the count for it to be a perfected signal. We could still rally. Same thing going on with the Dow monthly chart. The 9 count, we're going a little higher here in the monthly time frame. We're slamming into some major resistance levels as I've been talking about. Just like the S&P, the Dow weekly chart, again, an 8 of a 9. 7 is the high of the count. So again, we could still see the Dow try to move to new high this week or next week if the counts are to complete. The bar has to be above the bar from 4 weeks ago, the count to continue. So I'll be watching. Can the Dow move to new high? S&P, and then do the top out, do these divergences in the weekly time frame, in the monthly time frame, do they begin to play out? Do the trend lines weekly and the monthly time frame begin to play out? My guess is they're going to. You're going to see a major top, and I think you could see that here in early October or mid-October. This week, maybe next week, maybe a little bit longer, 19 days or 20 something days or whatever. Maybe the following week, a rule of thumb, guideline. It could be very similar. We could see a very similar situation right now to what we've had in the past with the tops first rate cuts there in 2001 and 2007. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the chart, if you like the indicators, please let me know that by supporting the channel. You could take a moment to do that. I would really appreciate it. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Please let me know you want this information by supporting the channel today, and I thank you for your consideration for that. We have the VIX. The VIX was up 8.5% today. It's still above the 50 period, the green line. The 50 is still above the 200, telling us, hey, probably in a topping process. All the other clues we have on the weekly and the monthly charts. But if we're going to get a bigger rally back up, we got to see the VIX drop back below 50. Right now we're holding above it. So if this pullback is done, we see the VIX drop back below 50, we could get the bigger rally on the S&P, a new high, all-time high. If we continue to hold above 50, there's risk of a bigger drop towards the 20 period or the 50 period moving average, the rising trend line on the S&P 500, which you'll see in this video. I'm paying attention to the VIX, and will we rally with the jobs report? Will we sell off with it further? Looking for clues. And I think we'll go to a higher high on S&P. I think NASDAQ will fill the gap. I'll continue to point out I could be wrong about the gap fill. Don't have to fill it. Just my personal opinion, but I'm telling you what I think will happen. See more and more sell signals. We start seeing the VIX start spiking, and maybe we get more evidence of a reversal and that the top is in. My guess is that it's not the case, but it certainly could be. I'm looking for clues. We did the same thing that we did yesterday on the intraday charts here with the 5-minute chart in the S&P. Yesterday we gapped lower. Here we went to a new low. That's the only thing we didn't do. We didn't gap down to a new low, but we did gap down. Gap down and hammered on that 200 period, sold off on it, hammered on it, and we closed out that way. That was the previous day's session. Today, we gapped lower, went up to the 200 period again here in the 5-minute time frame, hammered on it, turned down, formed a bullish divergence, went up to it, got rejection, had it just like yesterday, turned down. This time went to a new low and got a triple bullish divergence on the RSI, and then we rallied back up, got back above the 50 towards the end of the session and stalled just underneath that 200 period moving average. If we can rally with the jobs report, get back above the 200 period, the S&P can start a rebound to a new high, which is what I believe is going to happen. I think the S&P will peak very soon based on history, based on our rule of thumb. We know about the rate cuts they've done before, terminating the bull market, ushering in the bear market. So again, I think that the S&P can still go to a new high, and I think it's going to top. I've continued, before we did move to new highs, continued to say S&P is going to make a new high. It finally did. I don't think it's done yet because NASDAQ hasn't filled the gap. I think NASDAQ will fill the gap at 20,400. That's done. I think S&P will peak. And again, that very good chance we could see that happen by next week, shortly thereafter. Again, using the previous Fed pivots as a guideline. Again, we're not trying to, the market has to peak in 17 days or 19 days. Guideline, give or take. Okay, so we're looking at this carefully. When we had the Fed rate cut, the first rate cut in September 18th, that's the very day we got it this time, this in 2024, this year in 2024. 17 sessions later, about 3.5 weeks, it peaked October 1st. Or I'm sorry, October 11th. By the way, that would be a week from tomorrow. That would be the 3.5 weeks would be completing by next Friday. It may be, see a peak sooner or later, give or take. It's a guideline. I'm not saying we peak 3.5 weeks at 11:33 a.m. right a.m. the market session. The guideline. That's what we're using it as. So keep that in mind. The point is that every time we got that first rate cut, here it completed at the top and we had a 20% drop, 20.5% drop that followed. You can see a very similar thing. We have a lot of similarities between the 2007 top and right now. Got those negative divergences going on in the weekly time frame that I think that will play out. But we moved to a new high for 2 weeks and then we turned. Now this is our third week broken a new high, so we're going to be watching to see can we continue and try to make a new high on the S&P 500 with the jobs report tomorrow or on into next week. I talked about the 2001 top, and again, 19 days or nearly 4 weeks later, we had already peaked. We had already dropped 19.5%. We got the Fed cut here. We bounced, and again, we were already below the 200. Already had the death cross. We were already sharply falling. It just gave us a counter trend. But in both cases, here we resumed the crash and went on to end up dropping 51% from the high 2000. The 2007 top, we ended up starting the crash, and we ended up starting the crash with a 20.5% sell-off. So, and this is a rule of thumb, a guideline. 3.5, 4 weeks, you can see what happened in the past. My guess is we're going to see something very similar. I think it will play out that way because what I'm seeing on the weekly and the monthly charts. Using it to try to make educated decisions based on historical data. So keep that in mind. The guideline, it's not an absolute. We're looking for clues. So off with the jobs report, I think S&P will come down to the trend line or the 20-week or 20-day moving average and try to bounce. Forming a rising wedge, I still think we're going up here, but right now, this horizontal support from the July peak here on the S&P daily. I think that the RSI will form a divergence. Now, if we sell off with the jobs report or, even come down and breach this level, maybe we include the shadow right here and go a little bit lower. I still think you're going to rally back up and you're going to come up here probably towards this trend line, try to form a divergence. We may try to start to rally or continue going sideways and still see this drop a little bit, as I've said, but I do think it's going to end up forming a divergence in all likelihood, much like what we had here, much like what we had over here. But now we have the MACD rolling over as well. Well, again, will that put pressure with the jobs report and give us a bigger sell-off? We got a candle of indecision, a doji today. Look at that doji. We down again, 0.17% down, 9.5 points there on the S&P. We're below the 10, but we're still at the support. So again, if we bounce off support, we could get the rally with the jobs report. If we go down lower, then I'll be watching these trend lines. I'll be watching the 20-day moving average. But again, I think you're going to end up moving to a new high when NASDAQ fills the gap. NVIDIA helps that gap fill on NASDAQ. Continue to monitor the horizontal support here and the rising trend line, our 20-period moving average. So again, we'll be looking to see what happens. Back above the 10-period moving average, we can get a bullish reversal of conditions with momentum, which has now flipped. Then maybe we can come back up here and get it immediately like that and then give something like that. By the way, the Dow looks very similar. Again, below the 10-period. Dow is closer to the trend line. The 20-period is below it. Again, I've excluded the shadows. We may end up having to include the shadow here. And again, sometimes you do, sometimes you don't. But we'll be watching to see, can we get traction Dows come back to this level right here where, again, we tried to rally with the Fed. It ended up giving us a topping tail that was never confirmed, never got a follow through. And again, here we are right at this area. So again, we got a topping tail back over here. But the thing about this is really interesting. We got confirmation with this red bar right here. And now here we are. We've moved below it on an intraday basis today, but we didn't confirm it. There's been no follow through to that confirmation bar. So interesting. Again, we've got divergences here. Again, wrong about the gap fill. We start seeing more and more signals turn bearish. We could see a turn right here, right now. I have the guts to tell you what I think. I think we're going to fill the gap. I could be wrong about that. I'm telling you, the NASDAQ's going to fill the gap on, at 20,400. I think S&P is going to go up and hit the upper channel line in all likelihood. And I think we'll complete a top. See what becomes of this bearish MACD crossover. Do we get a bigger sell-off with the Dow? Do we get a bigger sell-off with the S&P? Before we try to rebound back up, is that it? Do we start seeing evidence of a top, or is it not quite done yet? Do we have to put the finishing touches on it still? Watching, do we try to rally with the jobs report tomorrow, or do we sell off further? Does it really start validating a reversal, possible completion of a top, or more work to be done? My guess is there's more work to be done, but I'm looking for clues just like you. Again, on the daily chart of the S&P, I think we're going to get this divergence in the most recent price action, very similar to this over here when we went up and we made new highs. But then have this larger divergence from the July peak. Same thing over here. We had this divergence. We had this little divergence give us a sell-off. This little divergence gave us a sell-off. We got the lower high in the RSI. Now the move above the lower high there. And again, this divergence is developing. We had a lower high here. We had a lower high here. This looks really very, very similar, as I continue to point out. Fascinating, and we're forming a rising wedge into major resistance on the monthly chart. We had a rising wedge over here as we pushed into major resistance on the monthly chart, the channel back 2022. I've shown you that monthly chart. It's pretty amazing. The channel here is a long-term channel going back to 1929. The one here goes back duration of the bull market back down to the 2009 low. So it's pretty fascinating. Turned off a trend line here. Could be turning off a trend line here if we turn off that long-term monthly chart that I've talked about. Eventually, again, we're going to come back, take out the 200. The 50 will cross below it. Come back, test this trend line, probably bounce, and eventually breach this trend line, ushering in the bear market. S&P 60-minute chart. Again, we're right at the support at 56.69, which was the peak for July. We're right at this level of support. If we go down, you can fill the gap and hit the 200. Moving towards that 20 period on the daily chart. If you bounce here, we could end up forming a brand new divergence. Build upon the previous one. Again, the previous one gave us this sell-off back to horizontal support. So we'll be watching. The MACD is negative. We're below the 50, still above the 200 period. So do we drop down to test the 200, or do we try to get back above that 50 period moving average? We'll be watching. Should we try to bounce off horizontal support? And these divergences just may have given us nothing more than a pullback. We, again, still may make new highs. My guess is we're going to that because NASDAQ has now filled that gap. I think it will end up filling the gap. Well, further with the jobs report, I still think a divergence is very possible, okay? Could be with today's candle of indecision, with the doji we got, it could be we try to bounce. Right here at the green dots of support, they're holding, but we saw red. So again, momentum is bearish. If we start selling off, a lot of trend signals will start turning bearish. Now momentum has turned bearish. I think that, again, we could either sell off, the two scenarios, we could either sell off further and then turn back up and form this divergence, or I think we could do it right here, right now, and still see red bars maybe even, but start the ball rolling on the rally back up. And again, we're getting the MACD rolling over, still in positive territory. The oscillator is still in positive territory, but bars are red. Again, this is speculation on my part. I think that a divergence is likely to set up. I told you after the July peak, over here we never did move to new high. And when we sold off, I was looking for a bottom that's still going to take us to new highs. We got it with the inflation data. Some jobs report sell-off. We're going to get the jobs report tomorrow. Do we get another ugly sell-off with it, or do we rebound with really, really good fake numbers that the rally that goes, oh, we're gonna see. There's no risk of the economy weakening. We're not gonna have a recession. We're gonna have a soft landing. This big rally could be. We could see a really good number with the jobs report right before the election here. We'll see what happens. But I'm just telling you, I do think a divergence could set up here on the awesome oscillator. Sold off a little bit, and then we're kind of going sideways here, and we're holding right at that support from the July peak. So again, we'll be watching to see if it holds or not, or if we try to go a little bit lower, or do we bounce. Mind, we had these negative divergences on the MACD, on the awesome oscillator here in the weekly time frame. This is eventually going to play out. Maybe it plays out immediately. A lot of things going on. I mean, if we end up selling off with the jobs report, other concerns about the economy with the port workers strike now, that may not initially trigger some kind of sell-off, but eventually it could. We've got tensions in the Middle East. We know Israel's has said that they're going to respond to the missile attack by Iran. So tensions in the Middle East. What's that going to do to oil? Again, geopolitical issues. Sometimes the market ignores them. Other times you get the knee-jerk reaction. Other times it rattles markets for a little while. We just simply don't know. These are things, the port worker strike, tensions in the Middle East, economic data like the jobs report and the inflation data next week. These are things we should be paying attention to. Forget we're going to get those FOMC minutes next week as well. These divergences are going to play out, and I think it's going to play out in the not-too-distant future here. And again, I told you, in history, could have seen a peak this week or next week based on the historical data or the 19 days the following week. So again, we're looking at that mid to early October area on the historical data. Again, as a rule of thumb, a guideline. It may be longer, it may be shorter. For a similar situation, but with a lower high on the weekly chart for the NASDAQ. I got another green bar here this week going on. So again, I think we will go higher and end up going to the 20,400 area. Here we are at 19,000, just below 19,800. I think NASDAQ will end up forming a divergence as well, but I don't think it will move to a new high. I think that the peak was on July 10th, as I said, leading up into July 10th. And on the 11th, I told you I thought July 10th was the top. Again, wrong on that, but I tell you exactly what I think. I'm telling you, I think S&P will move to new highs. I don't think NASDAQ will. I think they'll diverge from one another, just like they diverged at this peak over here. NASDAQ made a lower high. S&P made a higher high on July 16th, and they diverged. I think the larger divergence will also form. I do think a divergence is going to form also between NASDAQ moving to a new high and the awesome oscillator here. Now, again, the move may not be done. Like I said, the pullback may be bigger, but I still think we're going higher. A divergence. Now, again, be completely wrong about that. Start seeing the weekly signals begin to play out and start seeing a reversal with a lot of indicators that spill over and allow those weekly signals to begin to play out. I think we buy a little bit more time. I'll share with you both of those scenarios, what I think and what possibly still could happen. Again, it could be that we've completed the lower high. My guess is that's not the case, but again, I'm open-minded to it. And I'm looking for clues. I think a divergence will develop here. We are seeing the momentum shift, as I talked about earlier in the week. That's still bearish. If it flips back up to bullish, we can resume the advance. If it remains bearish, there's risk of going lower. 20-period moving average just below. Here we are at the green dots. So again, we'll be watching that. S&P got a doji today. NASDAQ got really an inverted hammer, kind of a candlestick, a little bit easier to see. The bars reflecting the trend, but again, we're still below the 10-period moving average. Yesterday, we had the candle of indecision in the spinning top. So what I'll be watching is, do we, make our way down to the 20 for a test, or maybe we move beyond it, or do we try to form a bottom and get a rally back up? Even though momentum shifted with the reversal of conditions on NASDAQ, we don't have that for NVIDIA. I still think NVIDIA is going to come up here and take out the August high and, again, test the peaks over here, but I don't think we're going to move to new high. I think we peaked back in June, and, again, I think that will help NASDAQ fill the gap at 20,400. Had a rally of 3.37% today, but NASDAQ still struggled. Watching to see if NVIDIA can help with getting back above the 10-period today, if it can help NASDAQ going forward or not. Here again, I think NVIDIA's in an ABC move. NASDAQ moved above the August high. The Price of NVIDIA did not. I think it still will and will complete an ABC. I don't think it'll move above the June high. I think that NVIDIA has topped. Bounce today, we'll see if that can help. And getting back above the 10, we'll see if that can help NASDAQ going forward. The doji on the S&P is either a continuation that we're going to get a bigger sell-off, maybe to the trend line of the 20 period. Could be a reversal bar. We'll be watching. But again, I told you momentum had reached extremes. I talked about this potential sell-off. It's happened here. My guess is that we're not done topping yet. And I think we get one more high. Whether we get a pullback, it's deeper or not, we'll see. Still think by next week we could still see new highs. And we can even form a divergence here with momentum, very similar to what I'm looking for on the RSI and the Awesome Oscillator. Again, we can't rule out that we're trying to peak right here, right now, that we're turning. If we get more evidence of that, and the divergences, are completing, and they may not be done yet. If we get a rally with the jobs report tomorrow or next week at some point, we still may hit the upper boundary of this upper channel line, excluding the shadows here or including them, maybe just a little bit higher. Plus, you can see the divergence developing clearly as I can. Again, very similar to what we have over here. Again, the daily and the weekly charts now look very similar to what we had back in 2022. And I showed you the daily. Look at the divergence on the MACD from, again, the peak over here, just like the peak over here, and then the more recent price action, I don't think it's done yet, but it could be. We'll see if we get evidence of that, but my guess is it's not, and I think NASDAQ will fill the gap. But again, I think it's close to it, and I think that if based on history as our guideline, the Fed pivot, the first rate cuts in 2001, 2007, again, could be begin to with that. Now, why do I say that? Because, again, the Fed's starting to cut. They're saying, oh, we want to keep the expansion going. They're cutting because they know a recession's coming. They're going to do more cuts. Market will begin to price in a recession. Well, the Fed's going to cut, and they're going to bring back QE. And so, again, not going to be a bear market. The Fed can't do what they did in 2020 and lower rates down to nothing and bring back QE infinity and beyond, at least not right now. They might do it later, but they can't do it now. They need a recession. The recession would actually help deal with the inflation issue. Again, these divergences are about to play out. They may not be done yet. My guess is they're not, but again, I'm looking for clues. Over here, we moved to a new high for 2 weeks, and then that second week we got a reversal. Here, we've been above the July high now. This is our third week. We're right at support. Do we start turning and seeing evidence of a reversal like this, or do we go a little bit higher this week or next week? And again, we have 8 of 9 counts on the S&P 500 weekly chart, along with the Dow. NASDAQ got the 9 count with its top in July. I believe that was it for the NASDAQ. Similar diversions on the Dow at the RSI. Look at the multiple point diversions on the RSI here. And it may not be done. Maybe it is. Maybe it's starting to turn here. Look at the MACD, the divergence that is forming down here. Crazy bearish divergence right here. This is going to eventually play out. And again, the chart looks very similar, again, also to the 2022 high. Again, the Dow could possibly peak before the S&P does. Keep that in mind. That happens from time to time. May see the S&P go make a new high next week, but the Dow may not join it. We'll be watching to see how it unfolds. Well, I'm talking about weekly charts. This is the Russell, and again, the Russell's diverging with the S&P 500. We have the diverging with the NASDAQ. The Dow's made new highs last week. NASDAQ's not making new highs. So again, very interesting. And again, this is what usually happens around tops. When we have the larger diversions from the 2021 top, we had the divergence over here when the S&P moved to a new high in 2022. The Russell did not. They diverged. This ugly bearish divergence developing here on the MACD. The divergence with that recent high right here, and now potentially lower highs. Very similar divergence over here. Again, look at the weekly charts. Look at all these divergences. It's hard not to find a divergence or a triple divergence on the S&P 500. But look at the divergence here. Still may not be done. We still may go up into the upper channel line, may even overthrow it a little bit. Again, my target level is between 5750 and 6000 on the S&P 500. That's the monthly trend lines that I've been talking to you about. It didn't move above 5750. We're at the lower end of the target. We did that last week. Still may go up and hit this level. We still may go closer towards that upper channel line there, the extremes, on the monthly chart that I've been talking about. But this divergence is going to play out. And again, when it happens, people are going to be going, what happened? But look at these triple divergences and divergences like on the MACD. They're all over the place. We'll see if it's done yet or not. These are warning, hey, we're about to get a reversal. That's starting now. We stop making new highs, or maybe we go a little bit higher if we try to fill that gap on NASDAQ 100 at 20,400. Maybe S&P goes into that upper boundary. Now again, I told you momentum was at extremes, likely going to roll over. We've seen this sell-off. Still could form a divergence here. Again, got almost a little tiny inverted hammer, but it is a hollow red candlestick as well here on the NASDAQ daily chart. So again, could be that we tried to get back above that 10 period. NVIDIA got back above the 10 period today. NVIDIA had that big rally. NASDAQ had sold off, but it recovered, and it only closed down by about 9 points. Can it get back above the 10 period and join NVIDIA? If NVIDIA moves above the August high, which again, NASDAQ has already done right here, moving above this point right here, I think that we will move to fill this gap at 20,400, and that's where I think the S&P will top, is when we see that happen with NASDAQ. And I believe that NASDAQ peaked over here, as I've talked about length and detail. I believe that we're in an ABC move. Told you right here that I was looking for a bottom. Last jobs report, we'll see if we get a rally with this one. If this hollow red candlestick can play out, can we get this rally back up here? My guess is we're going to rally up to this level, but I don't think we'll move to a new high, and you'll complete a double top on NASDAQ. Maybe we end up seeing a divergence on the RSI, awesome oscillator, and maybe here with momentum. We've got a potential bull flag that's developing here on the 60-minute chart of the NASDAQ. Again, we came back up and we fell just shy of this gap fill area. I think that we're still going to do it. You have a bull flag now. Again, I think we have the ABC structure, and I don't think it's done yet. And I think that when it finishes filling this gap, and I'm not saying we're going to go to 20,400 and that's it, slam the brakes on. It may play out that way. Sometimes it does. Sometimes you fill the gap and that's it. Then boom, you reverse. Other times you overthrow that level. Over here, the peak was at 20,670 or 90 or something like that, just under the 20,700 area. I don't think we're going to exceed that level. So I think you're going to peak out here probably between 20,400 and this just under 20,700 area. Maybe we go up to 20,500 or 550 or 6 or something like that. Maybe we just hit 20,400 and retreat. We'll see what happens. But I think that you could see this rally, and then I think we'll see a reversal soon follow. NASDAQ, and just let me show you this chart, I think NASDAQ will fill that gap, but then I think it will get a big reversal after that, ending up taking out the 200 period, breaking the trend line, and up a double top pattern, very similar to what Bitcoin did back when it peaked in March.